Welcome back, passive income investors alike. Today, I want to show you how to buy, analyze, and come down to the final decisions to actually purchase a stock or company, guys. And this is going to be really a fun video today because I realized I've never actually taught anyone how I go through the process of buying a stock. And it all starts usually right here on YouTube, guys, because I listen to a lot of different subscribers. Here's a few you can personally take some advice from, and I will listen and analyze some of the companies that they talk about. I will also do Google searches, and you can even just do something as basic as, best REIT stocks, and you're going to want to absorb as much of this information as humanly possible, because this is where you're going to end up getting your list of things to analyze so you can find something that fits your morale and your portfolio type. For an example, here's my own personal portfolio, guys. What I've done here is I focus on buying some pretty aggressive growth kind of companies that have good track records, and I will liquidate them slowly over time as they grow to buy higher yielding dividend stocks. I always want stocks that pay over 4% yield if it's for a dividend. Right now I'm yielding just, I think, around a 5.5% dividend yield. Don't quote me on that, but you can do the math. If you take 66,000 and divide it out of 3,371 in a percent form, I'm sure you're going to get somewhere just over 5%. And this is all tax free. So this is how I focus on building my own personal portfolio. But mainly I'm done buying growth stocks, guys. I don't want more of Apple or Microsoft anymore. I'm done buying these in all of my portfolios, because I do have one over here as well, which again, really aggressive kind of dividend stocks like BTI. What I actually do to find one of these stocks is I will compile my list from listening and absorbing as much information as possible. And you can see I've got a bunch of REITs up here because I want to buy a REIT. And I started looking at all these REITs and realized, I'm going to do a little video showing you guys how to analyze them, buy a stock. And we're going to go through a bunch real quick. So we're looking at Iron Mountain. Iron Mountain is a very interesting REIT because essentially they have built a hole in a mountain, built a warehouse, put a big lock on it, and essentially store some of the Fortune 500 top secret documents, guys, really expensive paintings and things of wealth and stored nature. So this company pays a 7% dividend yield, which really makes me feel good. A bit of a higher PE for a REIT, but still not terrible, with a $10 billion market cap and one hell of a chart. This is the kind of chart I want to see in companies I am buying. I don't like companies with volatility, but we're going to continue forward with something like Lamar Advertising as an example. In Canada and the US, anytime you see big billboards, there's a chance Lamar might own it, and they own the billboard real estate kind of industry. It's a really weird thing. Forward P of 25 and $7.7 billion market cap. Again, over 4% dividend yield, which is what we want to see. But my thing that I don't enjoy when I see a chart like this, guys, is that back in the early 2000s, you'll notice they had some wicked volatility, and for some reason they had a hard time sustaining the '08 crash, which is something that I always have to question, which makes me have to go into their books, look way back when, and see why the revenues changed so much. Are they going to be affected by it in the future? Which means there's going to be a lot more homework in trying to figure out if this dividend is going to be sustainable. Whereas with Iron, right here, Iron Mountain, you're going to notice that they really did a good job sustaining the '08 crash. Didn't really, the volatility wasn't too bad. The company dropped from the highest to the lowest, maybe 40%, which again seems pretty volatile. But again, when you look at something like Lamar, guys, that went from a whopping $64 to $8, lower than $8. It's a terrifying thing to have to go through. So this looks like you're going to get a really nice growth rate with some decent stability. Here's another interesting one. We got Glad Land Corp. I do believe this is a company that deals with farmland and water-based kind of farmland. I'm going to have to do some research because this company was founded in 1997, but I don't know how long they have been public for because this chart doesn't go too far back. But just like every IPO, usually companies drop because they're either at fair or overvalued when they come into an IPO. It looks like it bottomed out in 2016 and then has had a nice stable ride ever since, with, again, paying about a 4.5% dividend yield, really high PE ratio. But I think this is in a growth state, but I just have to do a little more research because it's more of a new company, not the longest track record. We don't even have a full decade in for these guys yet. So again, it'd be a nice thing to look into and see because it's got a relatively small market cap, which probably explains the higher PE. Because again, newer company, growth rate. Company's been around for a while, but publicly, when a company becomes public, it becomes a whole different ball game. So we have LTC Properties, real estate investment trust company. I can't since the early 2000s they've done nothing but successively growth for about 20 years with a 5.2% dividend yield. I think this company, don't quote me on this, deals with like really high-end real estate where like the people that work for those big tech companies can't even afford to buy the homes and they make six figures. This company is the reason for that. This company makes premium homes. Don't quote me on that. I think that's what this company is. Might be another one of these ones on here, but we got Realty Income Corp. Another one paying a 3.9% dividend yield, not really high enough for me. Just it looks like it's been on a bit of a run lately, so I was just looking at it. It's a rather large REIT with a $21 billion market cap. If you were buying it down here, the dividend probably would have been a lot healthier. But this is one that made my list just in case it has a dip, but I don't know what it is yet. I haven't looked any farther into it. We have SX Property Trust, another one that's had a good growth. A little bit of a drop in '08. And whatnot, but no dividend yield, guys. I don't want to buy these companies that don't have dividend yields. I'm not looking for more growth companies, so this would not make my list. It would be scrapped right away from just a quick analysis, guys. And then we have RioCan, Canadian real estate stock that are currently building a lot of new big high rises that are going to have malls in them as well, downtown Toronto. But when we look at this chart, guys, it's been stagnant for literally almost the last 20 years, and you've just been relying on a 5.6% dividend yield. But really cheap PE, $7.7 billion market cap, but it is one of the largest realty income trusts in Canada, guys. So after this crazy analysis of just scanning through these, I don't like using scanners, guys. I really don't. I'd rather just personally read articles, find them, because scanners can sometimes miss things that you can find by just simply reading into news articles and things like that. But if we go through these, the ones that would make my list, guys, are these ones that have done really well during the bad times, like the '08 crash that didn't drop much more than 30 to 50%, which can be a huge decline, but in the reality of it, it's not much, especially considering we've seen that already with stocks today. I mean, in the end of 2018, we saw all those stocks come down quite a bit, guys. Facebook and that down 30-40%. So when going through these analysis, guys, and just looking at these charts and the basic information on these companies, like I said, the three things I'm mainly looking for is it within a reasonable market cap, preferably over $1 billion with a PE within reason, depending on whether it's going to be higher aggressive growth or if it's going to be, you just have to do your analysis on this, but you can see a company like this is a really low PE, really high dividend yield. It would make my initial further deeper research list, so I would keep that. The one that I put right in the front here that interests me the most is this one, guys. Just like GEO Group, it pays a really high dividend yield. Not a lot of people talk about it. A little bit higher of a PE, but again, for this kind of charting, I mean, you would expect a higher PE. This company has just got some massive, beautiful stability to it and an incredible growth rate, guys. We're talking about a company that if you bought in 2009, you would have been picking it up for somewhere between 20 and 25 bucks. And today, you'd be up quite incredibly just in equity, let alone dividend yield. So what I would do after this, guys, is I would immediately go into their books on my trading platform, and I would start looking at their fundamentals once I pick some of the ones that I personally feel attached to. I like their books. I like their story. I like what they're doing. We'll go look and seeing, is this company profitable? Their book value, 6.58, positive book value. Cash flow on earnings per share is $2. Looks fairly healthy. Price to earnings, 16.5. Price to cash flow about 10x, not terrible at all. Very healthy company. It looks like they have a very high debt to capital. I really want to look into the debt to capital. It looks pretty intensive. So let's go into their balance sheet here, guys, just to analyze the quick things I like to look at, which is essentially total current assets or total assets of $11.8 billion and total liabilities of about $10 billion. So this is a highly debted company, a little higher than most people like to see in a REIT. It's nice if it's just over 50%, because essentially that means that if you liquidated everything today, guys, with their total liabilities, you'd be looking at only ending up with what? So from total assets to total liabilities. So if you would minus this from this, guys, you'd end up with, just around $2 billion. Not terrible, but it's really high debt rates, guys, for a REIT. A lot of people have problems with that. Most people like to see a company that way less debted, because it's really going to come down to interest rate volatility. If interest rates go up, you think this company would be affected. As you can clearly see, their liabilities have gone up just as steadily as their total assets have kind of increased as well. But then again, you're going to have to do more research, because you're looking at a company here, guys, that you think would be affected by interest rates, but somehow holds a steady grind upwards, doing a really good job paying that dividend yield, which we're going to have to do some research in as well, because I don't know, does that company consistently pay a healthy dividend yield? Has the dividend yield grown? I'm not too sure, but if we take a quick look at their cash flow before we examine that, we're going to notice over time their capital, holy geez, from 2017 to 2018, net income increased dramatically, which is a good sign. This is super impressive, guys, actually, to see this massive cash flow increase. A little bit of stagnating on the 2015, 2016, but from 2017 to 2018, my God, they've almost doubled revenues here in 2 years, or their cash in 2 years, which is wildly impressive, guys. Total cash from investments have increased rapidly. So you can see why this company has a really high PE, because they're really focusing on aggressive growth, which they're proving a track record for, guys. But I really want to see the thing that interests me the most, which is the dividend. So maybe we'll just go dividend for IRM stock history. So you literally, this is all you're doing when you're trying to analyze these stocks, guys. And we just want to see their overall history here, which looks like it had some volatility to it. But we went, so from 2019, 2018, I like seeing a number decrease into the past, guys. So if we go back again, let's say a decade here to as early as we can, we don't want to go, let's just say 2011. So from 2011 here, guys, from 25 cents all the way up to 61. Oh my God, that is a wild dividend increase over time. Like, poof, you're talking about a dividend, it's tripled their dividends in a decade, guys. That is a wildly impressive dividend chart. So you can see here, you can see the increase on these yields, guys, over time. So I mean, if you bought this back then, you are laughing with the increases. This company just makes me feel extremely giddy inside, guys. It's honestly made my buy list. Every time I hear about companies like this, I like, the first thing, is it unique? Is it hard to compete with? Do they have a proven track record? They've been around long enough to have a proven track record. They have a big enough market cap that they can't just be wiped out overnight, guys. This company just sends a lot of check marks off. It gives me that good feeling, that butterfly feeling. And this is where I'll end up going into their website. So this is where I'm going to go into their website, guys, and I'm just going to analyze and see what they actually do from what I heard. So I was told that they basically store some interesting information. Iron Cloud Storage mentioned here. Apparently we have secure storage record and media, and secure e-waste and IT asset disposition. So it sounds like they've got a diversified way of storing information. Here's the mountain stuff that I heard of. Let's just take a quick look here, guys, at what we can deal with. Here we got information and management, digital transformation. Overall, the website looks very clean and very put together. I like when I can easily find all the information that I need, and it's right in front of you. I hate having to search page after page after page to find investor relations, things like that. You even got a number you can call right now if you have any extra questions. I love how easily this is laid out. Very beautiful website, might I say, but it's been around for a while. After I'm done analyzing all of their website stuff, guys, which I'm not going to make you do, I'm going to leave all the links in the description below. You can see that they do a bunch of stuff I didn't even realize, like secure destruction project, secure shredding, e-waste, so stuff that I didn't even know about, because from my understanding, even as I scroll down, they talk about the mountain guys where they, bury their interesting information. But damn, what a fascinating, interesting company, and it has definitely made my buy list. I'm going to do some deeper research to make sure there's nothing hidden in their balance sheet, which I will find in their investor relation page here, guys. But this is the total process that I will go through usually when I come to the decision to analyze and buy a company. And you should do roughly the same, if not a lot more. I literally can spend years before I will buy a company, guys. And honestly, guys, the more patient you are, the better off you're going to be, because when you go into buying these, when I start making the decision to do the purchase in my Scotia iTrade account, guys, I will actually make sure I steadily buy over time, because I don't know when this company could dip. So I like trying to buy it on a dip, and if it dips more, I will just keep buying it over for a long period of time. All my companies in my TFSA, guys, I have been buying consistently over the last 4 or 5 years. That's how these positions get to this size, is just consistent adding through dividends along with my own personal contributions, which you can clearly see I've maxed my TFSA. But let me know again, guys, what you think in the comment section below. This has been a really deep, interesting conversation. I hope you enjoyed it. I would love to learn more from you. What stocks are on your buy list? Let the world know. Keep the community vibrant and alive. That is what we're trying to build here, guys. So stay super cool, super awesome. Look forward to seeing you tomorrow.